Hello and welcome to another Market Update Monday. We have a new CPI report that came out last Thursday that had some great news and is going to be the topic of conversation today. While the report was really strong and we're very excited about it, I do want to throw a little bit of cold water on it because it was not all good news. Okay, so the report came in with a month-over-month increase of 0.4%, which is historically still a high number, but as compared to some of the numbers we've been seeing in the last year, it's definitely an improvement. And specifically, if you go back to the chart that we've been using here, you'll see that we're replacing an October figure from October of last year that was 0.9. And so by substituting a 0.9% monthly increase from 2021 with a 0.4% increase from 2022, the result is a drop of the total annual inflation of about a half a point. So we dropped from 8.2 to 7.7. And again, what we've been talking about this whole time is getting to this month where we had this huge number last year that we get to replace. And if you look at the chart moving forward, November is a 0.7 figure. December and January are both 0.6. And then we have February at 0.8 and March at 1.2. Those are some big numbers that we get to replace. And if things continue to move in the direction that they appear to be, we should be able to make some meaningful progress. However, there is a downside here. When we break down this report, that came out yesterday, one of the things that pops up that's potentially problematic is the shelter costs. Shelter costs make up about a third of the total inflation picture, and they went up by 0.8% last month, which is the largest increase we've seen in quite some time. We need to see that start to change course. If you take a look at this graph that I've got here of the shelter costs, you can see that they were fairly flat in 2020 and 2021, due in part to COVID restrictions on raising rents, as well as having a historically low rate environment in the mortgage world. Since then, both of those things have changed and the shelter costs have exploded. And so what we're going to need to watch moving forward is what happens with the shelter costs, because that's going to create resistance in the total inflation number, meaning that it won't be able to continue dropping as rapidly because that inflation piece is such a large component. Okay, so if we jump back over to the total inflation picture, again, we replaced a 0.9 with a 0.4, which is fantastic. What I was more excited about actually was the core inflation, which has been problematic in recent months. So even last month when we had a little bit of an improvement, core inflation worsened. Now remember, core inflation is the items that the Fed can affect with their monetary policy, right? So it strips out things like energy costs and groceries and things like that that aren't directly affected by the Fed's monetary policy. This month, however, it was expected to come in with an increase of 0.5%, and it actually came in at 0.3, which is a strong improvement. Things like used vehicles were down 2.4%. They actually decreased in cost. Apparel was down 0.7. A handful of other sectors are actually decreasing, deflating, I guess would be the word we'd use. But we had that shelter component, which is still tremendously problematic. And so we're going to keep an eye on that. In the total inflation picture, we saw fuel costs in October jump by almost 20%, which there was an expectation of that happening, but that caused the total inflation number to actually come in higher than it would have otherwise. It looks like some of that is reversing course in November, so it'll be interesting to see what happens next month. But again, jumping back to this chart that we have here, as you can see, we've got a number of months coming up where we can make some strong improvements, and hopefully if the forecast for rates to improve is accurate or comes to fruition, we'll start to see the shelter costs improve as well, or at least slow down. If we can get the shelter to stop increasing by almost a full percent per month, we can really start to chip away at this. Okay, and one last chart I want to go through here is the total inflation chart going back a couple of years. You can see that we've definitely created a crest. We've peaked here, it appears. And while there can be world events or something that comes in and throws all this up in the air, if we continue down the same path that we're on, we should continue to see improvements. And why that's important to us in the real estate and mortgage world is it should create a situation where the Fed slows down the rate hikes. As recently as a few days ago, there was about a 50 to 60% chance in most of our eyes that the Fed was going to increase rates again by 0.75 of a point. I was predicting that myself. This inflation report came in significantly better, and as a result, that's not likely anymore. More likely is a half point decrease, and it's starting to become possible they may start going smaller than that even. So right now the general consensus is a half point increase in December, and then they're going to slow down, and they may not even hike rates again until the end of Q1. So this next hike in December might be the last one we see for a while. It's all going to be dependent on the data. But this is definitely a positive step. And like I said, keep an eye on the shelter costs. That's going to be the big one moving forward. I hope you found this helpful. Have a great day. Be sure to like and subscribe, and KFA.